Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us the wind has left the sails of the so-called FANGs as U.S. 10-year treasuries hit the 3.25% mark. Marijuana stocks are also coming off their highs. Sprott USA Holdings President Rick Rule cautions BC has the same geopolitical risks for developing new mines as the Congo does. He also makes a rare offer to personally check out your portfolio. Bankruptcy trustee Harold Saunders gives us some tips on how to stay out of crushing debt. He also says don't be embarrassed to use an agency like his if you think you're getting in over your head. Plus, at the end of the show, we'll have company showcases from American Manganese President Larry Ray and Naturally Splendid CEO Douglas Mason. We'll talk to Ross Clark right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to This Week in Money, Ross.
Always good to be with you, Jim.
The 10-year Treasury in the U.S. now at 3.25%. What's that doing to the markets and the movement of money?
Well, it has. It's definitely had an impact. You know, it's interesting because this didn't come out of the blue. We've interest rates peaked or bottomed. Interest rates bottomed almost 2 years ago, December of 2016, and the bond market's been stair-stepping its way down. So as of 4 or 5 months ago, you had rates up to 3.1%. A pause, and now you've got this additional rise. The employment numbers, excellent out of the U.S., continuing to be, in this case, I think like a 40-year low as far as the unemployment rates are concerned, and with a good, strong GDP. So it's fueling what you would expect, a higher interest rate market. And you take a look at rates of change. That's probably as important as anything. And so the year-over-year rate of change right now is getting to be very high. I think we're up to about a 35% rate of change. And when you see peaks like that, it's hard for the stock market to absorb it because it's competing based upon yield and potential earnings growth with what goes on in the bond market. So here at a 3.25% rate, finally, it's sparking some concerns out there as far as stocks are concerned. Now, from a technical perspective, we are starting to see some climactic action as far as the bond market is concerned. This decline is at the tail end of the week, saw some of the largest volumes that we've seen in a number of years. So you're getting a lot of fund managers, a lot of speculators are selling bonds, moving from positions that they've had into, I guess, shorter-term duration, something a little safer. But what we see are levels that, from a technical perspective, are getting very, very close to capitulation. If we were to see some follow-through strength here in the next couple of days into the middle of next week, I'll actually get a capitulation signal. We've only had a dozen or so of those since the 1970s. And you would typically from there see a decent bounce as far as the bond market is concerned, but not a final bottom. You would end up seeing the bonds probably have that bounce and erode back down to a lower low in the next month or two. So if we take a look at yields, that probably means something here in this 3.25 to maybe 3.30 level should be an interim high. Maybe a pullback towards the 3.10 to 3.15 would be possible, but then back through the 3.25, 3.30 level before the end of the year. that type of action is not going to be good for the equity market. It's going to be tough for it to fight that.
Now, with the NAFTA 2.0 figured out, or at least tentatively, what's that doing to the markets?
Well, you take a look, Monday morning for the Canadian market started off exceptionally well, but this really was to sell the news type of a situation. You take a look at the auto parts companies, Linamar, Magna. From the Monday opening to the close of business on Friday, Linamar is down 13%, Magna's down 10%. So when they start to look at the details within the new agreement, it's not as positive as you would have hoped for. Clearly, the amount of time that was spent working towards this just really didn't produce a lot of significant changes. And if you take a look, the TSX itself has had a pretty rough week here. Look at the index itself having gone from maybe 16,200 to now under 16, puts it at the lowest levels that we've seen since May. And there's probably another, easily another 200 to 300 points left on the downside before it even starts to get oversold.
And have some cavities developed in the so-called fangs.
Yes. What we've really gone through big rotations this year. The FANGs, which had been leading on the upside, semiconductors, and the tech stocks, all taking a big, well, I shouldn't say all, most taking a big breather up here. You've got, Facebook, which has had its fair share of problems, down now at, testing the worst levels of the year. And, then we take a look at the other areas on the Canadian side where the cannabis stocks had been just excelling on the upside through the summer, and they are now, as I say, what was hot in there is now turned cold, and I wouldn't be at all surprised that as legislation finally comes into place here on the 17th, that we continue to see things eroding away. You're going to get your short-term pops as ventures come into place that have to be right now in the negotiation stage, and you'll get some decent little moves. But overall, this sector, I think, is going to take a fair amount of time to now form a base from which it can have another really prolonged move on the upside.
Ross, thank you so much for being on This Week in Money.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Rick Rule next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Rule, President and CEO of Sprott USA Holdings. He's speaking to us from Vancouver. Rick, welcome back to This Week in Money.
Thank you. Always a pleasure to speak to your audience.
How was the 2018 edition of the Sprott Symposium in Vancouver?
I think very successful. Of course, there's a bit of founder's bias there. But we had a great range of keynote speakers. We were able to welcome a personal favorite of mine, Jim Grant, this year. We had a great range of exhibitors. We made the attendees some fairly immediate money with the Nevson takeover. It was wonderful, really, in a bear market for mining to be able to turn out 900 like-minded people. And of course, the weather cooperated with us spectacularly. We did an attendee boat cruise in the harbor and an exhibitor speaker boat cruise in the harbor, both of which were memorable. So from every point of view, I was happy with the conference.
Will the Sprott Symposium be coming back to Vancouver?
Of course. We took over that symposium from the Agora publishing people. So if you add their tenor here with our own tenor, we've been producing this conference in Vancouver annually for over 20 years. The community's done a wonderful job of welcoming us, and I need to do a special shout-out to the Fairmont Hotel Vancouver, which has hosted that conference in good fashion for more than 20 years. They do a superb job.
Rick, we keep hearing the commitment of traders is bullish for gold and silver, yet those two metals continue to trade in a certain range. What are you hearing?
If you trade those metals in almost any other currency than the U.S. dollar, they've done their job. The U.S. dollar is just extremely strong relative to all other forms of money, gold included. Myself, I'm fairly comfortable with the way the gold market's acting. Probably more comfortable with the future of gold than the presence of gold, because I also believe that eventually aggregate debt levels in the United States, particularly government debt, but also corporate and personal debt, will cause the dollar to weaken a bit. And if you see the dollar roll over, you'll see gold really do its job. But I'm comfortable with the gold market the way it is. And I love the gold equities markets. The gold equities markets are very, very reasonably priced, which seldom happens. So I think that the gold market itself, the physical gold market, is healthy and will get healthier. And I think that the gold equities markets offers up some pretty good relative values. So I'm very, very happy.
What about gold juniors? We've had a big discovery in Australia. I mean, not just nuggets, golden boulders, and some promising stuff in the BC Golden Triangle.
Well, I think it's interesting that the junior market is starting to respond to discoveries again in a fairly soft overall market. Now, the junior market has had some of the luster taken off it, or maybe I should say some of the stupidity taken off it, by the disintermediation of the hot money from mining investments to things like cannabis and crypto. But the truth is that the market will always respond to a good discovery. With specific regards to those two discoveries, I'm less attracted to them than other parts of the market. The Australian discovery is a consequence of the fact that I think it's likely to be fairly small, albeit splashy. And with regards to BC, because although I continue to regard BC as a community that has exceptional exploration talent, and I also believe that northwestern BC is prospective geologically, my belief is that the political risk in British Columbia is increasing on a monthly basis. And so I personally am decreasing my investments in BC domiciled exploration.
Is that concerns that the Green Party kind of has the NDP by the short and tenders?
I don't think that the NDP themselves have ever been any friends of mining, but my belief is that the NDP and the Greens have an increasingly urban constituency, which means that the trade union parts of the NDP, I think, will be unable to protect rural jobs. I think that the risk becomes that the green narrative, not the green reality, and the urban narrative of the Greens and the NDPs will obviate the ability of rural constituencies to protect themselves. The joke that we have around here is that the growth industry in BC will be cannabis seed infused granola for sales at UBC and in Kitsilano, not an atmosphere conducive to mining particularly.
Are the new trade agreements being done by the Trump administration good for commodities?
No, I don't think so. The ultimate victim of a trade war is always the consumer. Trade wars make everyone poorer, no matter how they work out. It's interesting to hear it even discussed as a free trade agreement. You'll note that the original NAFTA agreement, which was just modified, was 3,600 pages long. If you as a Canadian and I as an American wanted to have a free trade agreement, we could accomplish that in one paragraph, 1/3 of a page, saying that there will be no restrictions to the free trade between willing buyers and willing sellers. A 3,600-page document that then has a 900-page addendum is anything but a free trade agreement. Managed trade, that is political interference in trade, always makes the consumer poorer to the benefit of special political interest groups. And that's precisely what happened this time. Whether or not it was the best deal that could have been obtained for Canadian interest groups is a different discussion. But the fact is that managed trade always makes everyone poorer. Commodities bull markets take place when when consumers are richer. And so in every circumstance, a managed trade agreement will be bad for commodities markets.
Are the U.S. tariffs just a replacement for the money lost with the tax breaks?
No, it's all about domestic politics. It was said, I believe, by Ambrose Bierce, but perhaps it was H.L. Mencken, that elections are advanced auctions of stolen property. And small interest groups that have a high stake in certain outcomes always manage to outspend by way of political promises or campaign contributions or vote delivering. Smaller outcomes. Witness Trudeau defending the dairy industry as an example, or Trump trying to favor U.S. steel markets. This was much less about revenue than it was about vote buying.
Is it true the tariffs on aluminum and steel have boosted the cost of a U.S.-made car by $1,500?
I don't know if the number is $1,500, but I'll stick by my earlier statement. The consumer is always the victim of protectionist legislation.
We'll have more with Rick Rule next on This Week in Money.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Rule. Rick, are interest rates likely to keep rising?
It looks as though, at least in the United States, that the economy is strong enough, or at least that there is enough liquidity in the system, that the Fed will be able to allow interest rates to rise a little bit more. Of course, time will tell. When you increase the benchmark 10-year rate, you increase the cost, as an example, of home ownership and new car sales. So it'll be interesting to see if the economy can withstand the interest rate rise. But I think one of the consequences of Trump's tax cut has been that the system is still awash in liquidity. And it would seem as though, as a consequence of that liquidity and very high equities prices, that the market will be able to sustain another interest rate rise.
Do you think there's a danger if interest rates rise too high, it'll put the brakes on a good economy?
There's always a danger of that. You know, even looking at an economy the size of the United States economy, it's important to note that liquidity, that is the availability of cash, isn't necessarily an indication of solvency when the ability to repay what you own. If you look at the aggregate U.S. debt levels, $20 trillion in recourse liabilities at the federal level, and well over $100 trillion of non-recourse liabilities at the federal level. Then add back state and municipal debt, corporate debt, and individual debt. Certainly debt service takes up a larger proportion of disposable income at every level than anybody would be comfortable with. And rising interest rates make the debt service increasingly problematic and constrain the availability of capital for other more productive uses. Right now, as a consequence of liquidity, we aren't having a solvency discussion. If the cost of servicing that debt began to be prohibitive, then the dialogue would change, and could change very rapidly.
Should rising interest rates be igniting bull markets for gold and silver?
It depends on the nature, the cause of the higher interest rates. Often in my career, people have said that higher interest rates are negative for gold and silver. But I remember coming into the business in the 1970s, a period where the U.S. 10-year Treasury rate increased, sixfold or sevenfold? And the price of gold went from an admittedly price-controlled $35 an ounce to $850 an ounce. If the interest rates increase because savers demand a premium as a consequence of the debasement of the underlying currency, then gold prices could be expected to do very well.
Is silver likely to take off before gold does?
If past is prologue, gold will take off before silver does. In other words, silver will lag gold. But because silver is more volatile, in a bull market, if past is prologue again, one would expect the silver ultimately to outpace gold in terms of its ultimate gain.
Are you bullish on gold and silver juniors, short and long term?
I am never bullish about the outlook for the whole of the junior market. The whole of the junior market is a very efficient destroyer of capital. The listed junior market on a global basis destroys somewhere between $2 and $5 billion a year. What I do note, however, is that 5 or 10% of the listed juniors worldwide deliver so much value that they add respectability and sometimes even luster to an extraordinarily inefficient sector. A carefully chosen, and I mean carefully chosen, portfolio of juniors can yield really, truly stunning returns to investors. But investing in the sector as a whole is a recipe for failure in almost any market.
Are gold and silver deals having a tough time getting financing?
No. There is very, very adequate access to capital for high-quality deals right now. There is a reasonable amount of equity available. Of course, the management teams wish that the cost of capital was lower. There is a lot of smart money in the sector, but the sector itself prefers dumb money to smart money. There's not a lot of generalist investors, and we've seen the really lunatic investors, the really hot money, drawn away from the metals markets to the crypto markets and the cannabis markets, the markets that are hot and therefore necessarily overpriced.
What's your opinion on marijuana? And also, a lot of people are saying the action there is a lot like Bitcoin.
Well, to be honest with you, I haven't had any personal experience with marijuana for many, many years, although I look forward to correcting that as a consequence of legalization. I will say that some of the valuations of cannabis companies are to be charitable, forward-looking, billion-dollar-plus market capitalizations for pre-cash flow, in fact, pre-revenue companies, remind me of the worst excesses of the gold business. I do laugh at the interest in cannabis in BC. One of the jokes we have internally at Sprott is that finally the Vancouver business community is involved in an industry that they understand intimately, with due diligence taking place on almost every street corner nightly throughout Vancouver.
Are you bullish on base metals?
I am. I think the base metals markets are in good condition precisely because they've been downtrodden. I'm bullish over time, not immediately, but bullish over time in the agricultural mineral space and the uranium space too, for the same reason. You know, if, as an example, the copper price, let's say, and it isn't, but let's say that the copper price was at $2.50 a pound. When the incentive price for new copper production is $3.50 a pound, and the price of copper is $2.50 a pound, all you have to ask yourself is whether 6 or 7 or 8 years from now, electricity will flow into new homes. Because if the copper price doesn't return to a price that allows copper producers to earn their cost of capital, there won't be any copper. The thing that speculators need to remember, first and foremost, is that the cure for low prices is always low prices, and the cure for high prices is always high prices. When metals are priced below the total cost of production, the prices go up. That's what happens.
Is geopolitical risk increasing for mining?
Around the world, absolutely. We are having a global tilt to the left. And there is a growing sense among populations that the social take from mining has to increase. So in every jurisdiction in the world, including politically problematic ones like Congo and British Columbia, there is a sense in the politic, a narrative that the social take from mining has to increase, and that increasingly new regulations need to be put in place. So yes, political risk for mining is increasing really around the world. There are some jurisdictions, Australia and Chile as an example, where mining is such an integral part of society that the political risks are less. But even in those jurisdictions, the political risks to mining are increasing.
Do you think it's because urban populations don't realize how important mining is to give them the necessities of everyday life? And that includes their precious little smartphones.
I wouldn't want to speculate on that. If I did, I would, at least in terms of their opinion of me, disenfranchise many of your listeners.
Oil is hitting new highs again that it hasn't seen in a long time. Is this the canary in the coal mine for the global economy?
I don't think so. I think it's a reflection of an interview that you and I had 3 years ago, where we talked about the fact that on a global basis it cost about $60 US to produce a barrel of oil, including the cost of capital, and that oil was selling for $45 a barrel. At that point in time, the industry was losing $15 a barrel 100 million times a day. In other words, the industry was losing $1.5 billion a barrel. What that meant was that they were constrained in terms of sustaining capital investments, and that production cuts were sure to follow at the same time that low oil prices stimulated demand. We talked 3 years ago, you and I, about the circumstance that caused today's oil price to occur, and that was supply destruction. Countries like Mexico and Venezuela, siphoning off cash from the oil industry to subsidize politically expedient domestic spending programs and constraining their ability to produce oil. Of course, the Canadian legislatures have also done a wonderful thing for oil markets by not approving transmission capacity that could move Canadian hydrocarbons to markets and thereby artificially constrain supplies. It's interesting to note that the BC provincial and the federal legislatures have done a wonderful job subsidizing American producers at the expense of Canadian workers and the Canadian taxpayer.
Once oil starts moving higher, do gold and silver usually follow?
Not in my experience. There is a suggestion that higher energy prices are indicative of higher inflation, and as a consequence draw the gold price higher. That hasn't been the case in my particular experience. There are circumstances, of course, where late cycle moves, which often cause commodity prices to go higher, also suck gold and silver prices higher as a consequence of expansionist monetary policy. But I haven't observed in my life the causal connection between higher energy prices and higher precious metals prices.
Are the fundamentals bullish for uranium?
I think the medium-term fundamentals are very bullish for uranium. Going back to the earlier equation, the International Energy Agency suggests that it costs $60 a pound fully loaded to produce uranium. That includes the cost of capital, and it amortizes past years' write-downs. Making something for $60 and selling something for $27 is extraordinarily unpleasant. Now, the truth is that we still have a supply overhang that's a consequence of the disaster at Fukushima. And my belief is that a rebound in uranium prices in the next 18 to 24 months will be constrained by the pace of Japanese restarts. If Japanese restarts increase, then the price of uranium will increase faster. Irrespective of Japanese restarts, if you are willing to look out 3 years or 4 years or 5 years, the pace of new reactor construction, particularly in China, is such that the uranium markets take care of themselves. Many investors aren't willing to take a 3-year outlook. Many investors, speculators, actually, have trauma holding stock over a long weekend, so those sort of market fundamentals are not useful to them.
Is the wise investor the one who looks long-term?
Absolutely. Yeah, absolutely. You know, investors pay an awful lot of attention, or rather speculators pay an awful lot of attention to share prices, and don't do much by way of forming an opinion as to the value of the investment. Money is made on the delta between the value of something and its price. And value is always a proposition that takes place over 2 years or 3 years or 4 years.
We'll have more with Rick Rule when This Week in Money returns.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Rick Rule. Rick, is the lithium market turning bullish?
I don't think so. I think that what has happened in lithium is that demand for the product has increased faster than the processing capabilities or the processing infrastructure has. The world has very, very ample supplies of lithium resources. What we haven't had is sufficient investment in processing capacity. My suspicion is that the 4 big lithium producers in the world right now will be the 4 big lithium producers in the world 4 or 5 years from now, and that they will increase processing capacity fast enough to turn mineralized lithium into finished chemical processes. My suspicion is that 4 years from now, you'll see lithium prices below and perhaps substantially below the prices that exist today.
With the growth of electric vehicles and power storage, is cobalt from the Congo being frowned upon, and what could it mean for the price of cobalt?
You know, cobalt is a very, very interesting market. I have not seen the evolution of world-class cobalt deposits occurring in any place other than Congo, with the possible exception of Russia. So you have political constraints on cobalt supply. My suspicion is that the answer to that will be technological. My suspicion is that we are going to develop technologies over the next 5 years that require much less cobalt concentration in distributed storage. My suspicion is in the next 2 or 3 years, the consequence of political disruption, particularly in the Congo, and the explosive increase in demand for distributed storage, i.e. batteries, I think you're going to see very strong cobalt prices for the next 2 or 3 years. But I suspect that ultimately the resolution of that will be technological advances in metallurgy and battery composition that will see cobalt become a less important component.
We're seeing mega battery factories pop up all over the place. Is that an area people should be looking at to invest in?
I'm not so sure. Well, let me rephrase that. I don't have enough experience in the battery markets to know whether or not investing in battery manufacturing or battery technology is a good thing to do. I certainly believe that the ascent of man, that is, the increase in living standards on a global basis, will require more and more and more distributed power capabilities, that is, more batteries. And I think nickel and copper will be the primary beneficiary of those trends.
Elon Musk, with his troubles with the SEC and so on, could that spell the death of the Tesla?
I think if Tesla dies, and I'm not forecasting that Tesla's going to die, I think if Tesla dies, it'll be more a function of their balance sheet. Tesla took on an awful lot of debt and decided to follow 3 business strategies, electric vehicles, batteries, and retail solar distribution simultaneously. The consequence of that is that their balance sheet, that is their assets versus liabilities, seems to me to be very, very, very out of whack, at least for the next 2 years, with regards to their ability to generate the cash necessary to service and amortize the debt.
Is the new NAFTA deal a boon to the North American economy?
No. I mean, that's impossible. Can you imagine that anything that Trump and Trudeau between themselves could cook up would be beneficial to anything other than the political elites? A deal that constrains the free access to goods and markets by free peoples is always bad. NAFTA had no winners except for the political elites, and it generated something like 400 million losers.
Is the brokerage business becoming tougher and tougher due to overregulation?
Yes, absolutely. Now, ironically, that inures to my benefit. The well-financed incumbents, and Sprott is certainly a well-financed incumbent, enjoy, perversely, the fact that the regulators discourage nimble competitors that would help investors. So what the government has done with this level of absolutely idiotic regulation is constrain competition. And while it makes my life unpleasant, ironically, at age 65, it shields me from the competitive efforts of 25 and 35-year-olds who could otherwise outwork and outrun me.
There's now mainstream media coverage and photos of CEOs of major gold companies and other principals slaughtering rare animals in Africa. Could this behavior affect their companies and share prices?
I think it probably does impact the narrative around their share prices. The gentleman in question, Mark Bristow, is a personal friend of mine, and it would be useful if the narrative would include his personal contributions to big game related and conservation related philanthropies. I would be interested if the authors of the articles who criticize his sport hunting would compare their contributions or their paper's contributions to conservation relative to Mr. Bristow's. That notwithstanding, I suspect that Mr. Bristow will have to begin to constrain at least his publication of photos documenting his proclivity for hunting big game as a consequence of narrative. The truth is that one of the things that you learn if you are active in habitat preservation, and I'm very active in habitat preservation myself, is that irrespective of the popular narrative, habitat has to pay rent. And if part of the price of that is big game hunting, or put differently, if it becomes necessary in British Columbia to have sportsmen, if that's what you want to call them, pay $100,000 or $150,000 for the privilege of shooting a grizzly bear, and the consequence of that is that the $150,000 per bear goes back into habitat conservation rather than, as an example, into cattle ranching or some other form of land use, ultimately that might inure to the benefit, in fact, of the species populations. The truth is, however, that the narrative very seldom gets around to the arithmetic, and most people don't want to believe that habitat has to pay rent or that a popular narrative should have any social cost whatsoever. Ultimately, though, we have to pay attention to arithmetic.
Isn't this very much like Ducks Unlimited? Before they came along, wildfowl were losing their habitat hand over fist, and so this group of interested hunters decided that habitat preservation and expansion was really important.
I think it is. And, from my own point of view, given that I'm no longer a big game hunter, I wish that Mr. Bristow could confine his trophy aspirations to photographic aspirations. That notwithstanding, it's none of my business what Mark does with his money. The example of Ducks Unlimited, which has been to do an awful lot for wetlands preservation throughout all of the North American flyways and corridors, or Trout Unlimited's preservation of riparian habitats, or the Pacific Salmon Foundation's work to protect with their own money spawning channels and to finance studies of the impacts of an example on eelgrass banks on salmon juveniles. I think all of those organizations have done a wonderful job in terms of habitat and species preservation, and I think the sportsmen's contributions to those efforts have been overlooked by people who have a very different narrative.
Rick, how can people find out more about Sprott?
I would be delighted if your listeners would go to our website, which is either www.sprottglobal.com or www.sprott.com. For those listeners of viewers who are resource speculators, I would invite them to email me with their resource portfolios. They can reach me at rrule, that's RRULE, at sprottglobal.com. If they will email me in the text their resource portfolios, both the company names and the company symbols, I will email them back on an absolutely no obligation basis rankings, my rankings of the companies that are in their portfolios. People who do it soon will need to accord me a little bit of time because tomorrow I'm flying to the Middle East and Europe on business. But within 2 or 3 weeks, should be able by return email to send back company rankings for anybody who is interested in my opinions on the resource components of their portfolios.
Rick, that's an extraordinary offer.
Well, I look forward to doing it.
Rick, thank you so much for being on This Week in Money.
Always a pleasure. Thank you. I enjoy the opportunity to converse with your audience.
My guest has been Rick Rule, President and CEO of Sprott USA Holdings. He was speaking to us from Vancouver. Coming up, Harold Saunders next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Harold Saunders, a trustee in bankruptcy with Campbell Saunders in Vancouver. You can find them online at csvan.com. Harold, welcome back to This Week in Money.
Thank you so much. Great to be with you.
Harold, mortgage and consumer debt levels seem to be out of control, not just in Canada, but worldwide. How and when is a trustee in bankruptcy able to help people with financial problems when they're just in over their heads?
Well, what we normally do is we have a meeting with them and recommend it's not going to cost them anything to come in and talk to us. And we build a picture of what their situation is, the amount of extent of the debt, what if they're working, their earnings, or assets that they have. And then we look at various options. Can they pay off the debt on their own? Can they go to family or friends for help? Maybe they can go through a program, which I know Credit Counseling Society gives, where you just pay your debt, all of your debt over a period of time. They can make arrangements with the bank. Then we get involved, or sometimes issues can be solved by lawyers. It's better than using a trustee. We get involved if you can do a consumer proposal, which means there's a formal compromise of your debt, which is debts under $250,000, not including house mortgages. But if your debt is above that, then it's a bigger proposal that we do. And then obviously, if no other alternatives, then there's a bankruptcy option that has to be considered. So we look at all the options when people come in.
How can people tell that they really need the help of a trustee?
When they feel they're running into difficulties, they can't pay their bills on time, or they're struggling to meet their monthly payments. They're just running short every month. They're going to family or friends for help. They're increasing their debt levels. They're only paying basically interest payments or minimal payments or whatever, and they're not reducing their debt. Then I think that's when they should consider talking to a trustee, and that's important because there could be various options that they can pursue.
Would a good warning sign be you're using a credit card to pay off your other credit card debts?
That's right. That means you're not really reducing your debt. You're just borrowing from Peter to pay Paul.
We hear the real estate market in Vancouver is turning down. Banks are becoming more conservative with their lending. Sales have slowed, prices are dropping, a significant number of people are investing in or working in real estate and associated industries. How many people could be at risk of investment loss or job loss, and what could people do to be proactive and protect themselves?
Well, if you've got quite a bit of debt, you have equity in your home, you have a house, there's equity, you may be able to remortgage if you can handle the debt load. You may be able to, as I said earlier, go to family or friends to help to tide you through everything. You could possibly sell, depending on the equity, you can sell the properties that pay off your debts. This is before doing any form of situation, but I think, and we generally, when people come to see us, we say to them, look, here's an option. Going bankrupt or doing a proposal is the last option, obviously. Let's see what other options are available.
How serious is bankruptcy in Canada? If you do it, what kind of consequences do you face?
Well, it affects your credit rating. It'll be on your credit record for 6 years after, if you go bankrupt, 6 years after you've been discharged, your debts are forgiven. In a proposal, it's 3 years after you complete the terms of your proposal. And you may find difficulty in getting credit. Not saying you won't, but you can have difficulty in obtaining credit. Because really, it'll probably check and say, oh boy, you've been bankrupt or if you've done a proposal. Sometimes if proposals are done, some creditors may be a little more lenient. Doesn't mean you won't get credit.
Would it be unusual for somebody who's in financial trouble still to be offered new credit cards?
Yes. Yes. They may not know they're in financial difficulty, but, and some companies will give, even in a bankruptcy, they'll let you get a credit limit of about $500, $1,000, as long as it's, kept under control and you build up your credit rating.
How tough are banks making it to get real estate and consumer loans now?
From what I hear, banks are tightening up. I know the federal government with Canada Mortgage and Housing, they have basically, they've made a threshold to qualify higher. You have banks are there looking, and they're required to maintain a certain level of debt asset ratios, and I think they're getting, if they see and they're concerned, which we've had in the Lower Mainland, a booming real estate market. There's always a concern, wait a minute, when will this boom begin to slow down or whatever? So I've been told that some of the banks are maybe all are looking very carefully right now. They're not just lending you money and say, we'll just take a line of credit mortgage or things like that on your house, or increasing the mortgage or things like that.
When banks turn conservative on lending, is a recession usually around the corner?
Not necessarily. They're just concerned that people are just overextending themselves. Recessions occur a lot of times when there are times people lose their jobs or industries close down or they have to lay off people. There's other factors that may affect it in general. But it doesn't mean, a recession is around the corner. Not necessarily. So banks don't want a recession, obviously. But they're just being careful.
Should people take on interest-only loans?
You have to see where you're going and where things are happening. Interest-free loans are fine if you can make the payments, but at the end of the day, you still have to pay your debt off. So yes, that can give you a breather. For example, if, you have credit card debt and you can reconsolidate your debt into a line of credit which may have certain minimum payments or interest or whatever, then you have to assess, well, where am I going? Will I ever get out of this? Dig myself out of the problems I have. So every circumstance is different, and you got to look at it.
If you find yourself in tight financial times, are payday loans a bad idea?
Well, payday loans, if you don't pay it off on time, the interest rates are very high. And they charge, obviously, to do it. But desperate people sometimes go and get these loans, and it may help them for a certain period, as long as they can make the payments and pay it off. It's when they can't that the debt just, the interest rates basically increase the debt amount owing.
Is it true that over a year they're charging 432% interest?
I don't know. I hear the rates are high. I've never sat down and calculated it.
Well, one day I paused my TV set and looked at the fine print on one of their ads, and the numbers were astounding.
Yep.
So if you can't pay it off right away, don't.
You got a problem. Yeah, you got to look at it. If you need something urgently, and you'll get the loan from, but you got to make sure the money's coming in to pay it off. Because if you don't, then the debt will just significantly increase.
We'll have more with Harold Saunders next on This Week in Money.
Vadic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vadic's management has extensive potash exploration and development experience in Thailand. Vadic will have marketing advantage compared to Western producers. Drill program commences this spring. Vadic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Harold Saunders. Harold, if people are drowning in debt with car loans, consumer debt, credit card debt, are there options for those people to get back on track?
There are options. Obviously, if you have a car loan, let's say it's like a conditional sales contract on your vehicle or something like that, and you can't make your payments, if the bank, British Columbia, if the banks repossess the vehicle, it could wipe out the debt. If it's a consumer loan, it'll affect your credit rating, but at least you're out of that jam. As I said earlier, there's so many options to consider if you can't, if you just can't keep up with your debt load or you can't do things. And that's why coming to see someone like myself may be worthwhile, even if it may not result in a filing or doing anything. But at least you have some ideas where you can go to be on level ground.
Are people ashamed or worried that their image will be tarnished if they go and speak to a bankruptcy trustee?
I think initially they are, but there's a Privacy Act in British Columbia. If someone comes in to see me, I can't tell them they've come in to see me. There's a privacy legislation. Even when you go do a proposal, go bankrupt, I'm very careful. Sure, it's on your credit rating, the courts will have it. But if I see people who've come in to see me and are clients and whatever, and I see them in a public space or whatever, I tell them beforehand, don't be offended if I don't acknowledge you. And if you acknowledge me and speak to me, if I'm with someone or you're with someone, I may be hesitant. I may call you next day and apologize. But respecting someone's privacy is very, very important to me. They have to know that.
Should people be embarrassed if they run into financial trouble?
I think generally people are, but they shouldn't be embarrassed. I think but they should think, well, how do I get out of this? Or what can I do to relieve the pressure? Financial difficulties create a lot of pressure, on your disposable income, on your relationship with your spouse or whatever. It affects could affect one's emotional outlook. And I think that's why it's worthwhile to get in to see someone like us, or myself, to see, well, what can I do if you can do something? You want a realistic approach.
Banks have provided easy credit for a number of years, and at some point, some of that debt becomes unpayable. Do banks really try to assist their customers through tough times?
It depends. If they're basically totally delinquent, they have no communications with the bank. Banks get frustrated. They'll give their accounts out to collection agents, whatever. We always tell people, if you've got issues, contact your creditors earlier on if you can. And maybe they will reduce the payments for a while. Banks can say, okay, well, if you're required to pay about a $400 a month payment, maybe for another 3-4 months we'll let you pay $300 or something like that to but there's got to be some light at the end of the tunnel. If all you're just deferring the inevitable, then you have to look at it completely different. And you've got to look at circumstances. What if you lost someone in your family or your spouse or you might have reduced hours at work or loss of income? That's a whole different scenario that affects everything.
Should people stress out over debt or focus on getting out of it?
I think it depends on the personality of the individual. Stressing out, obviously, it's serious. Let's not belittle it. But I think what people should think is, how do I deal with the situation I'm in today? It's easier said than done when someone is under a lot of pressure. They're embarrassed. Many times you have the spouse does not know what the other spouse is doing, to keep their finances separately. And it's really difficult. I have situations where people come to see me, they were in debt when they got married but never disclosed it to their spouse. And that's very tough. And, we see the ways of handling it because of what they can do. The main thing is to find solutions. It may not be the solution may not be what you envision it to be, but maybe there is some light. There's some light at the end of the tunnel. I think that's the way you approach it.
We'll have more with Harold Saunders next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Harold Saunders. Harold, is it important to seek out a trustee in bankruptcy sooner than later in hope of avoiding bankruptcy? And do you really want to avoid declaring bankruptcy?
I think the sooner the better, if you're really in trouble, because there may be solutions there to help you avoid to any formal filings. I think, but if, that's why I say it's better to come earlier. Maybe there is a solution. Maybe you can solve it in other ways rather than come to the last minute and then your choices are very limited.
Has there been a rise in the number of people seeking the help of your agency or similar agencies?
The economy, I'm speaking strictly for the Lower Mainland. The Lower Mainland economy has been phenomenal here. People are predicting, there has to be some issues and so forth. We're not seeing it yet. People are saying there may be some problems down the road. We know that the real estate market has slowed down. So far, we're not seeing a lot of people coming in yet that have those issues. But the key thing is, a lot of the pundits saying something has to give. But they were saying 2 years ago something has to give. But so far we haven't seen it. So we just got to wait and see what happens.
Are Canadians more likely to do everything possible to keep their homes rather than see them foreclosed and sold off?
Absolutely. I think people will do anything they can if they can live in their home. Your home is your castle, and if you can avoid having foreclosure or anything, absolutely they'd like to see that happen.
Can people avoid a foreclosure on their mortgage by transferring the ownership to, say, another spouse who doesn't have credit problems?
Depends on if you begin transferring assets or equity to a spouse and you have problems, there could be some problems down the road, because especially for transfer for undervalue, so less than the equity's worth. I think if the mortgage is still on the property, payments aren't made, the banks look say, why aren't you making our payments? And they have all the remedies that they can take.
In some cases, is it better to go bankrupt sooner and start with a clean slate?
It depends on circumstances. Some people say, look, I can't handle it. I want to get out of this thing and get back on my feet without the burden of the debt I have. And that's fine. Other people say, well, you know what? I can't deal with the debt I have right now, but I'd rather do a proposal, see if I can do a proposal to my creditors so I can still continue on. Yes, it's going to set my credit rating, but if I begin to do better, I can always pay the proposal off sooner. So I think, you gotta, the most important thing is knowing where you're at and sitting down and with someone and saying, what are my options here? What do you think are the best? I mean, you're in the driver's seat. We don't tell people what to do. We give them all their options and then, are there for them as they make their decision on what they do.
What's the biggest mistake people make when they start getting into debt problems?
Ignore it. They just continue incurring more debt, hoping that they'll keep going. And then at the end of the day, they just hit a brick wall. The best thing, as I said earlier, is sit down, assess where you're at. And as I say, there's many options. And those options may be viable if you don't wait to the last minute.
Do you think one of the key things people can do to get things under control is sit down and give yourself a realistic budget. And perhaps you really don't have to go out to dinner twice a week.
That's very important. Lifestyle. You live within your means. And, we see a lot of that. We see a lot of people who just, they have got to go out with their friends, got to go to the pubs, they got to go to restaurants and so forth, or, they can't control it. We see, unfortunately, a lot of people who are helping other family members. And without that help, the family members who have health issues that are not covered, whatever, could be problems. So we sit down and go over realistically with them, because you can't pay money you don't have. It's easier said than done, but at least we can work with them. Maybe, we tell them, look, there's options here, but you got to live within your means. You can't spend money you don't have.
Is writing down what you spend a good idea?
Excellent idea. And you can mark, you can if you can track it, see where your money's going. It's an eye opener. When someone goes bank, or even through the proposal where we give them budget sheets, say, look, write it down. You'll see where it's going, and then you can gauge for yourself.
What's the best advice you can give people about debt? Use
it wisely. Debt can be very helpful, but as long as you have the ability to repay it within a reasonable time. But if it's just avoiding the inevitable, then you got an issue. And the best thing best issue is really try to solve the problem before it becomes an even bigger problem.
Harold, if someone needs help, how can they get in touch with you?
Well, our telephone number here is 604-821-9882. We have two offices. We have an office in Richmond. We also have a small office in Vancouver on Thurlow Street, and we're here on Ackroyd Street in Richmond. But you can easily get hold of me at 604-821-9882, and my email, if you're on the run, give me an email, I can contact you, is hsaunders@csland.com.
Harold, thank you so much for being on This Week in Money.
Thank you so much for having me on.
My guest has been Harold Saunders, a trustee in bankruptcy with Campbell Saunders in Vancouver. Their website, csvan.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Rule, and Harold Saunders, and thank you for listening. Plus, stand by for company showcase updates from American Manganese CEO Larry Ray and Naturally Splendid President Douglas Mason. If you have any questions for the show, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Ray. Larry, welcome back to the show.
Always good to be on the show, Jim.
Larry, a lot of changes are happening in the lithium battery space. What kind of changes?
Well, there's changes in the types of batteries, the forms of the batteries, the amount of cobalt that's going in the batteries. The list goes on and on and on. But there's other changes that people are not, fully aware of. And when we first looked at this project back in early 2016, cobalt was around $10,000 a ton. And today it's at $55,000. And the relationship to that statement is that we could see that there was money to be made at $10,000 a ton if you could successfully get the cathode materials out of the disassembled battery. And that's what we've been working on, and we've gotten 100% of that. But all said and done, at the same time, when we were looking at this in the summer of 2016, battery manufacturers and big companies and governments that utilize the lithium-ion batteries had to pay the scrapyard to take the battery off their hands, and that was usually around $3 a pound. So if it was a 1,000-pound battery, that was $3,000 they had to pay the scrapyard. Well, that's changed over the last 2 years, and it's gradually got to the point now where the recycler has to pay for the battery. So that changes some dynamics. It doesn't really have a serious effect on what we're doing, but it's something that we have to consider and, take a look at in our business plan. And that cost is something that would be negotiated. And, like I say, we looked like we could be profitable at $10,000 a ton. Certainly the price is 5.5 times greater than that today at $55,000 a ton. So there's quite a bit of leeway in there for us to negotiate the acquisition, specifically of the cathode materials, and because that's what we're going to start with. But that is one of the changes that, of course, affects us and is going to make changes in our business plan. And it's going to increase the cost of the recycling and the total dynamics. But it's not a negative thing. What it tells you is that if you can get 100%, or very close to 100%, that you would be a leading corporation in this field. And that's what we strive for. That's what we are getting, to be a leader. And, because eventually the governments are going to turn around and say that's going to be another change, and that is that you have to recycle 100% of the battery. And you're not going to end up, burning the actual batteries that contain the cathode material after you strip off the supporting structure of the battery, which is the casing and the wiring and all those things. So I think we're well on our way to covering that base, and that certainly would be a dynamic tipping point in what's happening with AMI. If they were to rule that you have to get 100% back, then you would basically you would put us in the front of the tier. And that would certainly be a big boost for what we're trying to obtain, because we're trying to obtain a partner. We're trying to obtain financing, which is something that always is ongoing with when you're doing test work and you don't have cash flow. So it would take a lot of pressure off the stock, and it would take a lot of pressure off of management. We could devote full time to developing our product. All these things are what people have to consider. And it's our test work that's going on with our pilot plant. There's other IPs, as we said earlier in press releases, that we would be looking at filing for other IPs. All that has to be worked through with the final design of the plant. And, so it takes time and it takes money. But we want to do it right. We don't want to, go in and have a half-assed program. We want to have a full base covering program that allows us to produce at the rates that we would expect and that our shareholders should expect. So it takes a little more time than usual. But we're getting there, and, I can't be less optimistic about what's happening with Cametco Research on their end of the work that's being done. So that's kind of where I wanted to leave everybody, is that the landscape keeps shifting. I've been saying that in our press releases. It shifts in all kinds of different directions, so you have to be on top of that. So you got to have your pulse on the market, and we try to do that. And like I say, we're happy with the progress so far, and we're looking forward to going to the conference in Richmond next Saturday. I think that could be a great conference for the company. And we'll have to, of course, you don't know how great it's going to be until 2 or 3 weeks after the conference. But I know one thing, that we're not going to get any results if we don't go. So I wish everybody a happy long weekend, and I'm looking forward to it. Everybody needs a rest. And, because sometimes we put in 6-7 day weeks, especially when we're going to conferences and that sort of thing, and it's nice to get a break. And so that's where I'll leave it, Jim.
Larry, for people who aren't familiar with the company, where are you traded and how can they get more information?
Okay, we're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in Frankfurt, Germany under the symbol 2AM. You can read all about us. All our stuff is on our website, AmericanManganeseInc.com. You can reach us at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're very welcome, Jim.
My guest has been Larry Ray, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 5th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Douglas Mason, the CEO of Naturally Splendid Enterprises, online at naturallysplendid.com. Doug, welcome to Company Showcase.
Well, good morning, Jim, and thanks very much for having us on.
Doug, what can you tell us about Naturally Splendid?
Well, Naturally Splendid, in a nutshell, is a vertically integrated Canadian-based consumer products company. We're developing, producing, commercializing, and licensing an entirely new generation of plant-derived, nutrient-dense foods, bioactive ingredients, and related products focused on primarily cannabis sativa, and more specifically, the hemp plant. This is our main focus.
Doug, is this going to be put in other beverages as an omega-3 supplement?
Yes, the company has spent considerable money on research and development, developing a number of technologies that will enable us to enhance and add to existing product manufactured both in beverages and food. Specifically, you speak about our Hemp Omega. Hemp Omega is a very unique product. It is a micro-encapsulated form of hemp oil, and it has enabled the Hemp Omega, which contains the omega-3 and 6 in a nice balance, very much like fish oil, only plant-derived and sustainable. But it makes it soluble with this technology. And this is a technology that's proprietary, that, to our knowledge, there is no other supplier in the world of such a product. So they've spent several $1 million developing this technology, and we're just now beginning to commercialize it. So our opportunities lie in any beverage product, from water to beer, to specialized beverages that can include this fabulous sustainable ingredient.
And this would be good news for vegans who don't want to have any animal products.
Well, absolutely. It's not only environmentally sustainable because it's plant-based, primarily from the hemp plant, the cannabis sativa version, but it's not killing fish to provide that hemp omega that people have been using, and it also tastes a heck of a lot better than cod liver oil my mother used to feed me. It's another benefit of the hemp omega to supply your omega needs.
Naturally Splendid put out a news release the other day. What was in it?
Well, yes, this is one of many licensing and co-development agreements that we intend to be entering into. This is an early one with crop. And we're very excited to help and assist in creating some white label hemp products for their Hempire brand, as well as providing our proprietary Hemp Omega ingredient for Crop's new innovative Canna Drink. It's a functional soft drink line, very much in my historical sweet spots when we talk about beverages. So I'm very excited to be starting in as a great ingredient in beverages, and Crop is one of the early adopters of this technology into their Canna Drink line.
Doug, you had great success with Clearly Canadian. Did that attract you to the Naturally Splendid project?
Well, Jim, we had a very innovative approach to the beverage industry back in middle of 1985. It's going back a long ways. I'm aging myself. But we started with the first energy drink that grew to be a $10 billion category around the world with a product that we called Joe Cola. That was the first real energy-boosting drink, innovative and new. We then went to develop our line of Clearly Canadian beverages, which were the first fruit flavor beverages. Exponential growth went from no sales to in excess of $200 million US in 4 years in the marketplace. And I cited, when I first looked at Naturally Splendid, I could see the same type of opportunities for exponential growth in a variety of categories. I love the diversity of this company. I love the innovative nature of this company. They're trailblazing with technology, with new product developments. And we've prepared ourselves very handily for the introduction of, once legal, these CBD-enhanced product lines. And that's really one of our next big buckets of exponential growth that I see. I mean, some analysts have predicted that in Canada alone, this will grow to a $22 billion market over the next 5 years. So there's a huge amount of interest from the consumer level in CBD-enhanced products, and we intend to be at the forefront of that on the supply chain.
Doug, where are you traded, and how can people get more information about Naturally Splendid?
Well, we are traded in a variety of share exchanges. We're traded on the Canadian Venture Board under the symbol NSP. We also trade on the Frankfurt Exchange. We also trade over-the-counter in the U.S. To receive more information about the company, we have a very comprehensive website at naturallysplendid.com that will really give you the multitude of businesses that we are in. It'll give you a tracking line of how our sales have been progressing. One of the very exciting areas of growth in our company is in the area of white labeling energy bars and bites. We have a wonderful set of facilities. We have about $5 million for the manufacturing equipment that has gone into it, state-of-the-art manufacturing facility for bars and bites particularly. We also view bars and bites as a terrific medium for enhanced products once legal in Canada to include CBD as an ingredient in such food items.
Doug, thank you so much for chatting with us.
Jim, it's been a pleasure. Thanks for having us on once again.
We've been speaking with Douglas Mason, CEO of Naturally Splendid Enterprises. His website, naturallysplendid.com. I'm Jim Goddard. Our conversation took place on October 5th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.